Hello, everyone. Welcome to another episode of the Eitel Insights podcast. I'm your podcast host, Andy Park, and we've got another month upon us, which means new data has come out for the greater Vancouver real estate market. Dane, how's it going?
Excellent, Andy. It's always exciting when new data comes out. So now that September has sprung, and it's upon us, we got the August data. So everyone's back to work, the kids are back to school, and so here's some new information for everybody.
Cool. And just before we dive into the data itself, I've just been curious about just natural real estate cycles. So naturally, there's a bit of a lull in the summer months. Obviously, there's a lot of people on vacation, kids are out of school. So what's that generally mean for the real estate market? Not even talking about kind of our recent anomaly in the way things have been going down, but is there generally an uptick in activity, like selling and buying activity, or year to year?
Yeah, there is cyclical trends for sure that do occur. However, it really depends on market momentum and the larger macro trends, and then you have your seasonal trends that kind of follow suit. So during hot markets, it was kind of an aberration that there was a lot more sales and a lot more activity during summer months, according to history. And then during, downtrend, slower months, they're going, well, this is even slower than, averages. Yeah. That's why there is averages, right? Is because it's, higher during some years and lower during others. That's why we like to take, macro and micro trends and alert the public to them rather than just necessarily doing year over year or month over month data. Sometimes you get some false indicators that way for sure.
Okay. So, depending on kind of general market movements, there could be some predictable year-on-year
Absolutely.
trends.
There is seasonality factors for sure. So kind of, for example, this past summer leading into our fall season, we can see you'll see a lot of sellers come back to the market just because of, as we get into the data here, there's kind of a new effect that's propelling this market more so than really we've had over the last few years, right? Mm-hmm. So there's some buyers out there that are sniffing around, which is interesting. We'll get into that as the podcast goes along. Okay. So, but throughout summer, there was fairly low sales, especially based on, where we were during the peak. So there wasn't too much new inventory coming out. People were actually just taking the summer off of real estate really in a lot of ways, right? Especially for new inventory coming to the market. And the old sellers weren't really necessarily taking the price reductions. They're saying, you know what, just leave it the way it is. I'll take it off the market at the end of summer, and we'll see how the fall market goes. Maybe we'll list next year spring, or how it proceeds, right? So that's kind of the case that we see ourselves in going into September. But as we get further into the podcast, like we say, we'll kind of break that down a little bit further as well.
Okay. Cool. So let's jump into the August data. What's a little bit misleading about the data is that there was a little bit of a blip in the average sales price, which on its surface might seem like good news. But what's really interesting is that if you look at the macro level data, it actually firmly entrenches the data within the general downtrend that we've been prognosticating for a while here. So if you look at the screen, I'll try to explain this as simply as I can. You'll see kind of a top orange line and a bottom orange line and the middle of that downtrend. So this small blip in sales prices that you see is actually confirming the general downtrend of the market. Is my assessment of what's happened correct, Dane? And do you also agree that this is simply confirming the general downtrend of the market?
Absolutely. As we were kind of saying, our loyal followers, let's call them, we appreciate them for sure. They'll know that we were saying over the last quarter or so that prices were decreased to levels that were 17 and 18% off of the peaks. Mm-hmm. Well, that kind of led to stress mitigation. And what stress mitigation, again, just quickly is, in 2018, prices or the mortgage qualifications changed, where if you could qualify for $1 million, let's say at the end of 2017, in February of 2018, you could only qualify for $800,000. Nothing else changed. The job didn't change. No income values changed. Just this mortgage qualification. Yeah. So your purchasing power got slashed by 20%. Mm-hmm. And, throughout the years since then, the time and place, we heard other people say, well, mortgage rates are coming down, so that'll be stress test mitigation. No, truly what stress test mitigation is, how much purchasing power do you have? Right. Until the purchase price comes down to your purchasing power, there is no stress test mitigation. Right. And that's really what we saw here over the last little while. And as you correctly point out, that we're still very much so in the middle of the downtrend. Mm-hmm. So August data came in at 1,560,000. Mm-hmm. Now that's a a sharp movement up from 1,510,000, and I believe the price right around there was 2 months of data points. Now those two data points at the 17 and 18% losses from the peak were right very near the 10-year uptrend bottom line, right? So if we saw a sharp correction down, let's say by another 60, 70,000, then that's confirmation of a break in the 10-year uptrend. Right. To see it snap back up into the procedural downtrend that it currently is in place means that we're not ready to go that low quite yet. In theory, we can actually go even quite higher, up to 1.625 and a little bit beyond there, and still be firmly in the downtrend. Yeah. So actually what you see on the screen is 3 downtrend orange lines, right? So you see the very top line start at the triple top confirmation in the May 2017 prices of 1.829. And so we're quite a ways off of that. So there still is room for this price to go higher and still be firmly in that downtrend, as you rightfully say. Right. So, the longer prognostication is that we're still very much going lower longer. However, there is an opportunity here to sell into this market that these sideline buyers, by no fault of their own, said, we don't trust you with your own money, in essence. So, you know what? Here's your new qualification standard, and that's it. So there is a segment of the market that has a need to purchase in the market, right? I mean, they got kids, they've outgrown their current status, right? Their current property. So that necessitates a move to the detached market, and they were literally waiting for prices to come down. There's areas across Greater Vancouver where prices have come down. We see that reflected in the average, right? So they're starting to step up and move into the market. Now, then what that leads to, I mean, there's a finite group of them, right? There was a large swath of the market that got told, you literally can't buy right now. However, not everybody is interested in going ahead and purchasing. Even if they thought about it a couple years ago, they might not be interested in doing it now because they recognize the market's not hot. It's not an easy way to make money anymore, on and on and on. There's a lot of different reasons. So we only really see the purchasers coming up here is these mitigated buyers that have to that have a need to get back into this market. Once those buyers are gone, we think it's lower longer. So if you're thinking about selling, be one of the statistics in a positive way. Don't be one of the statistics that comes onto the market after the sales have happened, because it's not an investor that's looking for 3-4 properties at a time. It's for need based. Once they purchase, they're done purchasing, right? And like I say, it's probably going to be a relatively small blip in the long term of lower longer, especially with the sales and inventory, and we can get into that here. So the inventory will eventually pick up again through the summer months. We didn't really see too much in the way of brand new inventory coming out. In August, we saw 6,103 properties totally active across Greater Vancouver. We can anticipate maybe a continuation of that trend. On your chart here right now, you can see that it's basically in the middle of that upward trend as well. So that's continually growing as we see fit, or as the market sees fit when it's opportune. However, you're not going to achieve a sale if you're not on the market, right? So if you're actually seriously thinking about selling, don't miss out on this time, because if you do, you'll probably regret it, and you'll be on the market longer when there's no activity of buyers, because this segment's already been purchased. Right.
So from a seller's perspective, like realistically, if let's say their property's not listed right now, and I wanted to take advantage of this information, and let's say I wanted to use an Eitel Insights preferred realtor, is there enough time to do my own due diligence, reach out to you, get hooked up with a realtor, get consultation, list the house on the market, all within this small blip that we're seeing where there's a little bit of buyer FOMO? Like, is there realistically enough time if you get started?
There is. I mean, you don't have to hop on the train and meet me at the office tomorrow morning. I mean, you got some time, right? But it's not enough time to go on your next vacation, come back and start thinking about it, right? If you have been thinking about it, then reach out and we can have a conversation, get a consultation, order a static report, right? A basic report of how your region's looking going forward. What's the forecast? And that'll really kind of be your starting point to see if you have maybe a couple of months, or if your timing is even needs to be quicker and you got to get moving. Now, in saying that, even if you are in the case where you're wanting to sell, we like to say, we give you the forecast, we give you actionable intelligence, and the preferred Eitel Insights realtors that work in your neighborhood, they'll work on that marketing side, right? So on how to promote your house and take care of showings and listings and all of that in accordance. But we take care of the pricing in a lot of ways, shapes, and forms. So it just kind of makes everybody's role defined, right? And so the sellers get to take advantage of that, rather than, working with just any old agent that uses historical information without any trends. So they're they're 30 to 60 days behind on the price point, where we give you forecast of where it's going. So if you don't want to take your, the next 10% drubbing, then maybe it's best to take, your price today. Unfortunately, in this particular market, the market might look like it's going down a further 10%. It's not great news that it's already gone down, 12, 13, 15%, whatever it may be. But there is an additional 10 to 20 to 50. I mean, it really depends on which area we're talking. So we do give you that guidance, and then the realtor and the sellers are all informed, and everybody goes out and performs their role to the best of their abilities. That being said, if you're not priced sharply, you're not going to get too many looks. You're going to get some activity, and you're going to say, well, whose fault is it? The realtors say, well, I mean, the house isn't showing that well. We need to do a price. Well, then what price? And they'll still go back to that same old routine that didn't work previously. They'll show you the last 30 to 60 days of sales. Well, that didn't work previously. Why would you try the same repetition and expect a different result, right? So, we do find that our clients and our realtors get a lot better performance, especially in a challenging market, which this is a challenging market, but there is an opportunity here that probably won't be here 6 months from now, let's say.
Right. And, from a seller standpoint, as we have spoken about in previous podcasts, even if you take a loss now compared to the highs, I mean, the loss that you're taking now is still going to be better than the loss that comes 6 months from now, right? So if you if you think about it, from the old adage says, a penny saved is a penny earned, right? So if you, for example, take if you save, let's say, even $10,000 to $15,000 in losses by selling a little bit earlier, then think about how much work it takes to make that, right? Put cash in your pocket,
and I mean, the 10 or 15,000 is relative only if you're thinking about really selling, right?
Exactly,
if you're just saying, I want to ride this out, but I want to see what the market's going to do. That's fine and fair as well. Like, it's never bad to not be an ostrich, especially in the real estate market that Vancouver is in, right? If you're in some of the other places across Canada that don't move as fast, then that's, fine and fair. You don't really have to be totally tuned in. With Greater Vancouver, I mean, since we called the peak in the market, right, the market's reacted over $360,000. So that's a chunk of change. And as you kind of alluded to, a penny saved is a penny earned. $360,000 is a lot of pennies, right? So, it's an interesting topic always, but we actually, rather than just, talking interesting factoids, we actually offer actionable intelligence in our free podcast, so you can imagine what the client base gets, I mean, on an individualistic basis.
For sure. That's 36 million pennies, by the way.
There you go. For sure. Our mathematician.
For sure. So average sales prices tell one side of the story. Now let's talk a little bit about the actual number of sales. We are going to put this chart up right now, and what's really interesting with the latest sales figures is that we actually hit a triple top. So, Dane, can you explain to us what a triple top means in this market and why it's significant?
Sure. Yeah. So the triple top that we're kind of referring to here, it's basically a lowering highs in terms of the sales, but it also does form into a triple year top when you take the chart out to 2005, right? So that's where technical analysis is very interesting, right? I mean, you can see a lot of lines. However, not every line is as impactful as others. That's where Eitel Insights does differentiate. We show you the impactful lines. This line is potentially setting up to be very impactful. Do we think it's going to be here for the next 5 years? No. But, over the next short term, and in addition to, that buyer sec that we're seeing here, how much inventory is going to show up to kind of offset that. So when the market kind of broke out of its falling knife, which was a not so great event, that was a few months ago, I believe it was in March, and we saw sales right around 918. Now that was lower than the two previous highs of 950 and 930. Again, though, we can't seem to get above that 930, call it an average, right? So that's setting up to be your triple top as you look out on a grand spectrum.
And you see that on the, just for the viewer here, you see that on the green line. On
exactly, yeah, sorry. So yeah, on your screen, it'll be on the lower right-hand section, just the green line going horizontal as opposed to the red lines coming fairly perpendicularly down. That's your falling knife, right? And then you do have your conservative downtrend, which we still will adhere to, is the orange lines kind of going a little bit more horizontally perpendicular as opposed to the falling knife, right? So yeah, that green line is kind of setting up to be your topping mechanism. Now, we fully expect there to be higher lows put in, but that's not hard considering our lows were 374, which is the very low blue data points in that falling knife. So we'll probably set up either, you know, an ascending triangle meeting up right around that 930 price point or sales point, or we could set up a divergent trend, and then we'll see an explosion one way or the other. In any case, we don't really see this exploding higher. We see this as more of as a blip, as a short-term opportunity for first. I mean, and you know, we talk about sellers taking an opportunity. It's an opportunity for the buyers too, unfortunately. Like literally, those people got pushed to the sidelines. It wasn't that timing changed or their own personal qualification standards changed. It was national financial institutionals that had changed their qualification standards, right? So those people that had a need and literally kept kind of getting outbid, they were in unfortunate circumstances. Probably the last couple of years weren't very happy living in their cramped quarters, let's say, for that need based. So it's an opportunity for them too. But they're definitely going to do their shopping around. They're not going to just like lose out on that next $5,000 of the commission or of the contract, right? And then, you know, we speak about commissions. The realtors, you know, some of them have to kick that in because they don't know how to differentiate themselves, where it's really price point that kind of moves your property or at least gets it looks at this place in time, right? So it's not all about getting the commissions. It's really about servicing the client. And once you're servicing the client, what do they really need in this kind of market? It's information. It's really it's actionable intelligence like we offer, and it's truthful information. It's not just gut feel about what's your personal circumstances. What's the market going to do? What's my individual area going to do inside that market, right? So there's a lot of kind of moving factors here in a short term and point that, you know, when we do a podcast 6 months, a year, or a year from now, we'll say that was an opportunity. Was it the rosiest opportunity? Was it the opportunity 2016 was? No. I mean, no, it's not. Clearly, we're at a lower price point. But was it an opportunity compared to where we're going to be going forward? It definitely is.
Okay. Yeah, and I think that's the take-home message of this podcast, both in the average sales price and the number of sales. We see a temporary blip up, but if you actually look at the general downtrends and the ceiling of this triple top, those new data points are not aberrations, right?
It's more along the lines of a continuation, and that's kind of where we see it kind of oddly similar but different to other economists. They said, you know, a couple of months ago that was the bottom because the sales numbers had ticked up. Now that the sales numbers are off, they're cheering for the average sale price, where a couple of months ago they were saying the average sale price is meaningless. So they're kind of picking and choosing their data to support their thesis. We say all the data makes up our thesis, every single one. It's just that we take overall trends. So 1 month to another usually isn't enough to break a trend. When it's at a very interesting place in time, then that is enough. But, you know, the current place that we're at right now, really the only kind of interesting data points are the prices for the next couple of quarters.
Right.
Let's say, because those are always at very interesting price points. Does it go above 1.625, which is held as the middle threshold, which again, we'll just put the price point up here on the chart. The 1.625 is that yellow line going horizontal in our current market cycle. So does it go back above it where previously it didn't want to go below that mark just because you know, that had held as a temporary bottom? Now it might hold as a temporary ceiling, right? So or does it reach to the absolute apex of the downtrend, which is again that top orange line going south? So, you know, but it seems to be that it doesn't want to break this 10-year, so we can expect it to probably go a bit higher. Once we do see a confirmation and break of the 10-year uptrend, which is the two blue upward trend lines, that's when we go down to 1.40. If we don't hold at 1.40 million, then that's ultimately where we might test 1.225, which is indicated by the red horizontal line in the previous selling cycle, which would be something that Vancouver really hasn't seen for many decades. But it's an interesting time coming up for sure.
Okay, perfect. And the last topic that I wanted us to touch on today is the inventory figures.
Right.
Can you tell us a little bit about what's been happening there, and has it generally been consistent with what we're seing in the other charts?
Yeah, kind of as we alluded to earlier, you know, it's right in that middle threshold of the uptrend, right around 6,100, let's say. There's room for that to go both up and south, right? Yep. Basically staying within that range. I can see it possibly even going south for the, you know, let's say it can freely move without really being at too many too variably interesting points. But we're expecting that to kind of trend continually higher with higher lows and higher highs eventually being put in. Once you see this mitigation stress test affected folks, I think you will actually see a bunch of inventory come back onto the market However, those folks have already purchased, right? So that's Johnny come lately that missed out on the market, and now you're just building the inventory, you're building the days on market, you're building the competition, and even the stress test mitigated buyers that don't have to buy, they don't have that need. They're going to have fun watching you come back on the market and your prices fall off, right? So if you are thinking about selling, take advantage of this. Be realistic. Don't fight over that last $5,000 because it might cost you 50 or ultimately $100,000 in the long run, right? I mean, it depends on your personal situation and your modus operandi. But if you're thinking about selling, here's an opportunity. If you're thinking about buying, you're probably allowed to based on your stress test mitigation. However, if you don't have a need, we ultimately think that the prices will be going lower. Don't be too surprised with a little bit of price adjustment here over this next couple of quarter or two at the most, but ultimately it goes lower longer for sure.
All right. Great. Well, thanks a lot as always, Dane. There you have it. Expert insights from Eitel Insights. And we've just taken a look at the August data. We have lots more we want to talk about, but we need to cut this podcast as we are officially out of time. Visit eitelinsights.com, and we'll see you on the next one.